So as we look to the year ahead, what are some common themes that are likely? Obviously there'll be certain things that we just can't predict, but are there some common themes that you see happening within the markets going forward?
So we discussed, that inflation has been the key culprit for the market volatility we've seen over the past, 12 or 18 months. And we think actually inflation will remain a key driver for market returns in the months, the quarters to come. But this time it should be a bit more positive for the markets. We're starting a period of disinflation, and so that means falling inflation. And periods of disinflation are usually very positive for markets. And with the periods of disinflation, we should see actually the opportunities for central banks to start decreasing interest rates, which is really good news, or should be good news for equity and bond investors. And but one of the key challenges we're facing is that whilst we've seen the headline inflation coming down thanks to energy prices coming down, we're seeing the core inflation, which is the inflation ex food and energy, which is remaining very strong, around the 5-6% in the US, for example. And with inflation at that level, it's very unlikely that inflation will come down to central bank levels to around the 2%. So what's likely to happen, we believe, is that inflation could remain a bit more stable and then remain maybe plateauing at around the 5% level, which could push central banks to keep interest rates high and potentially even a bit higher to where they are, slightly higher to where they are. So whilst we are in a period of disinflation, we might see some periods where markets are becoming a bit more optimistic because inflation seems to be coming down, and then we can have periods where actually it's proving to take more time than markets were expecting, and then you could see some market setback. So in summary, we see a period of volatility that will carry on in the months to come, but over the medium term, we think that with that disinflation in place, that should be positive for the market. So inflation for us is a big theme. I think there's another big theme that we're very excited about and enthusiastic about is around climate. So we've seen historically, you and I as consumers willing to invest and to buy some environmental friendly products. We've been also seeing the UK, the US setting net zero policies, but what has been missing is the investments and as well as the regulation. And we see actually 2023 being a year that we could see those kind of 4 key tailwinds for climate aligning, and that makes us really enthusiastic about those companies that can take advantage of the additional spending around the transition and financing the transition to net zero.
Okay, so with all of that, and as investment manager yourself, how are EQ geared up to kind of deal with this? What themes will we see playing out in your portfolios?
So if we start speaking about inflation first, which obviously has been as we said, the key driver of return, is likely to remain the key driver of return. Our portfolios are well positioned to take advantage of that disinflation. So usually bonds should be a good return when we see inflation falling and interest rates falling. Equities, and specifically companies that tend to grow faster than the market, also should benefit from I guess lower economic growth, because then growth becomes scarce, so investors prefer these companies growing faster. But also because of inflation, as I said, remaining relatively strong for what we call the core inflation, and also because employment levels remains really strong. So we think that having some balance in the portfolio is really important. So having some diversification, some exposure to sectors that can take advantage of inflation potentially remaining higher for longer, but also part of the portfolio that can take advantage of this falling inflation level that we expect. So for us, it's very much about good diversification in our portfolios, but also it's about taking advantage of this climate theme, for example, which is expressed across the various ranges of sustainable portfolios we manage. So whether it's investing in companies that are today well positioned in terms of their business model, they're low carbon, they're transitioning to net zero, and these are businesses that are likely to be more robust, prepared for the climate change challenge ahead, but also for companies providing solutions. through sustainable transport, energy efficiency, or renewable energy products. And these are the type of companies you see in the EQ portfolios, and which we believe should be good performers over the medium to long term.